Good morning. This is Jim Barlow with OakTree Strategic Leverage. I'm actually in Hawaii right now, in Oahu, Honolulu. We're visiting with our daughter Annie and her husband Parker and three of our grandchildren, Bretling, Henry, and Eddie. We've been here a week, enjoying it. Nice weather, obviously, beautiful country. We'll be leaving in a couple days to spend some time in California with our two sons that are there. But we're doing a webinar. This is a new webinar. Haven't done it before. I'm sure I'm probably going to have some mistakes I need to correct in my PowerPoint, but inversion thinking. I'm moving away from the alchemist theme. I wanted something that still legitimate. Inversion Thinking and Kai Zen, a smarter framework for building wealth by eliminating loss first. What I'm going to have is a series of webinars. This is the first one. And Inversion Thinking and Kai Zen is going to be the one that I do monthly, the one I'm doing today. I'm also going to have a monthly one, Inversion Thinking, Retirement Income and Kai Zen. Another one monthly, Inversion Thinking, Family Gifting and Legacy and Kai Zen. Then bi-monthly, in other words, every other month for these two, Inversion Thinking, Executive Employee Benefits, Inversion Thinking, Business Succession. Then on a quarterly basis, I'm going to have Inversion Thinking, Leverage, Inversion Thinking, Market Volatility, and Inversion Thinking, Taxes. That'll be 5 webinars per month to keep abreast of. Anyway, this is the first one. When I get home, I'll be working hard to get the next one, the retirement income, ready. Here's the remaining webinars I have for January. I'm repeating this one on Wednesday, January 14th, 11 a.m. Mountain Standard Time. And there's the code to attend the webinar if you want to do a screenshot. On Tuesday, January 20th, I'll do the first retirement income. And then on Thursday, January 29th, I'll do the very first family gifting and legacy. And as you saw, I'll have those others. But anyway, let's get started. Inversion Thinking and Kai Zen, a smarter framework for building wealth, eliminating loss first. So we have this good-looking iceberg, looks pretty serene. It could almost be an island, a white island. But as all of you know, the problem is what is underneath. This is the things that causes the problems, not the serene-looking iceberg, but the iceberg that is underneath the water. So what derails investments isn't what people see, it's what they don't see. That is what inversion thinking is. So the conventional thinking, everyone says, well, how much can I make from this investment? Well, we start with a different question. That's what Kaizen is, really. How much can I avoid losing? Make sure the downside is protected. You know, you only get to invest and prepare for retirement really once. And if you have something unfortunate happen and derails the plan, you could be toast. We want to protect the downside. I've taken that graphic of the iceberg and what's underneath, And to visualize what we're trying to do, we're trying to look under the water, see what the problems are. So that's the symbol I'm going to use for this webinar. Charlie Munger was the partner of Warren Buffett, Berkshire Hathaway. I attended his couple of his lectures at Berkshire Hathaway a couple times in Omaha. Fun, interesting person to listen to. He's now passed on. But he was a big proponent of inversion thinking. He said, tell me where I'm going to die so I won't go there. When you first hear that, you say, what? Who? What? What's going on here? Well, tell me where I'm going to die. I'm not going to go there ever. That's inversion thinking in a funky way. Avoid stupidity is easier than seeking brilliance. Avoid the problems. Don't focus on how to win. Focus on how not to lose. Inversion thinking. It's a framework used by the world's best decision makers. Identify how failures happen, remove the cost of the loss, then allow growth to compound. Get rid of the bad things so that it can happen almost automatically. Most financial plans disappoint. The problem isn't effort, it's the framework. Most people save diligently, invest consistently, follow conventional advice. They do this because they know that something is needed down the road. Elon Musk, he's another one of the great inversion thinkers of today. He says, how does SpaceX improve faster than anyone else? How do they? Amazing, interesting company. Well, all his companies are. Musk doesn't start asking how can we make this rocket succeed? He starts by asking what could cause this rocket to fail. That's really essential, especially in space travel. Then he systematically identifies every possible failure point, eliminates or redesigns around these risks, and builds success only after failure is removed. The mindset isn't unique to investing, it's how high stakes decisions are made everywhere. So, inversion thinking simplifies decision making. It reduces risk, clarifies priorities, exposes blind spots, reveals hidden dangers, makes the right decisions obvious. When you remove what doesn't work, what does work becomes clear. Inversion thinking applied to football. You'll recognize this. Don't ask how to win, ask how teams lose. Most football games are lost because of, you can probably tell me what it is, turnovers. The turnover comparison. You turn the ball over 3 or 4 times in the game, you really, it's almost impossible to win. Football games are lost because of turnovers, missed assignments. Missed the guy, caught the ball and ran for a touchdown. Penalties are critical moments. We got a flag, I just ran the ball back. Poor situational decisions. Championship teams don't win by being aggressive, they win by being mistake proof. Listening to Kalani Sitake, of course, I'm a BYU fan, you all know. After the games, he's talking about the mistakes they made in wins and losses, and well, we're going to have to work on improving that. Version thinking applied to wealth. Don't ask how to win. Ask people how people lose. Most wealth plans fail because market losses, interrupted compounding, taxes, emotional decisions, poor timing, costs and fees. Leverage done wrong. Most financial plans don't fail because returns were too low. They fail because losses showed up at the wrong time. So here we are with our serene iceberg, which isn't a serene iceberg at all. Kaizen benefits are designed to prevent failure first before we talk about growth. You'll see, we eliminate the reasons investments fail. Kaizen is designed to eliminate these things, built to remove market loss first, reduce tax drag, protect compounding, limited emotional decision making, using leverage intelligently. Design for purpose, not prediction. Kaizen is designed for a supplemental retirement income, tax efficient income planning, family gifting, wealth transfer, executive employee benefits, business succession planning, creditor aware asset positioning. You notice a lot of those terminology there are in the webinars I have over the next 3 months. Oh, I forgot. Charitable and legacy goals. Kaizen is not a fit for everybody. Kaizen may not be appropriate for those who need short-term liquidity. This is not that. Have unstable or unpredictable incomes. Not that. Are uncontrollable with long-term structure. They're a day trader or a short-term trader. Prefer active trading or tactical decisions, seeking quick or speculative gains. This is a more sure and steady and long-term, with very little decision makings on your part. I'll be showing you all the details, or try to. Kaizen is designed for patience, discipline, and long-term intent. There is some qualifications. I'm not going to spend a lot of time on them. I do have a webinar that's been posted to my website, about 7 minutes, about answering these questions. Health, if you're not insurable, life insurance, if you're not insurable, it's done. I can't get it for you. There's an age limitation, nothing over 65. You need to have some financial strength and prove it for the insurance companies to do it. You need to have some funds available that you can contribute, and you need that patience we were talking about, a 15-year structure. These are the qualifications. There's 3 major sections about the details. First, I'm going to call it the foundation and protection benefits. I could have put life insurance there. Eliminates the risk that breaks financial plans. Legacy and living benefits. Protection today, legacy tomorrow. Living benefits. These policies give you disability insurance for accident and health issues. It gives you long-term care insurance, a legacy and living benefit. 2, this can become tax-free. No taxes ever. Back in when income tax were introduced, 1918, from that very first bill, they stated that income in life insurance proceeds are tax-free. They grow tax-deferred, and the way we use them for retirement income and things is we borrow from the policy. We like the leverage. We like the borrowed money because we make money on other people's money, tax-free. This is one of the ways we do this inversion thinking. No management or advisory fees. Life insurance doesn't have advisory fees. Don't have management fees. It does have insurance costs. But these benefits that I'm showing you will actually compensate for all the life insurance costs and beat the investment world on a level playing field. You'll beat the area as if you got life insurance free. But you don't have no management fee. You reduce the costs, except for life insurance costs, but over time, we can virtually eliminate that because we'll overcome it. The second area is risk management growth benefits, is participating in growth without exposing capital to loss. No market losses. When the market does a negative 30 or 20 or whatever, you get a zero. Nothing less than keeping your money. No market loss, no downside protection with market linked growth. Upside participation without that downside risk. This is inversion thinking. Protect downside. I haven't probably done a great job on this PowerPoint, but I want to show you how they do no downside. After the insurance costs, let's say a person has an extra $1,000 that's put into the policy beyond the insurance cost. A portion goes to the general account of the carrier. Then a portion can go to an option budget. The $952 in this $1,000 example at 1 year will grow back to $1,000. It doesn't matter what the index does, the option budget. If it does a zero at the end of the year, you still have your $1,000. This is how we have no downside. We replicate markets with the option budget. The third area is strategic leverage. The leverage. Using leverage structure and liquidity without chaos. The leverage structure, there's two sections here. Leverage structure, usability, and simplicity. Institutional leverage, we borrow as a whole. We get the lowest interest rates there is, more growth with less personal capital. It's a 5-year funding on your part. That's it for sure. Finite, predictable contributions. Trust ownership. We have a master trust that does the borrowing, and we have that actually in the state of Nevada. So you have creditor protection. Doctors who have large protection in their insurance policies, this protects their wealth by the structure of trust ownership. Very turnkey. Minimal management, very little to do on your part. We protected the downside, and we're almost letting it go on its own to fund these things later. Liquidity and feasibility. We don't have the liquidity in the first 15 years. But after that, we have major access without taxes, with no required minimum distribution benefits, distribution costs. Ultimately, tax-free, no downside, liquidity after the 15 years, turnkey, 5-year funding. This is the third area. So a little bit about the leverage. We have you pay 5 annual payments, or we have a company all in us that we can actually set up with a monthly. That's the Silver Pigs. The bank is paying about the same amount as you for the first 5 years, matching almost. Then they're taking on your payment after 5 years and continuing with theirs. So there's money going into the policy for 10 years, about a 3-to-1 leverage for you. And this is all done The way we've designed it with no credit checks, no loan documents, no personal guarantees, no signature, no collateral. Just that was a big deal. We're the only company that can do that in the country the way we've designed it. So it's 5 years of contribution on your part, 10 years of contributions by a bank, and then 15 years the design horizon so this all works. And this structure will help it work. And I did a visual here. We have this master trust that is doing the borrowing and doing all that work. And we have all your individual policies. We actually set up a trust for each and every one of you, a personal trust, so that they have this control to be able to pull it off for you. So the three sections are the foundation, protection, the risk management, growth, and then the leverage and control. There's the three areas. Growth becomes predictable when failure is designed out. Here is all the points I just showed you. The three areas: foundation, risk managed growth, and strategic leverage, with all the bullet points I just showed you. Now, here's some tools for you. This first tool, the QR code, will take you to this landing page, and you've got everything you possibly want to know about Kaizen. You got videos, you got chapters, you got explanations. At the same time, on this landing page, you'll have my phone number, you have my email. I'm available to help you as you strive to learn this product. We have a second landing page that's Kaizen 2, but it's with the twist of giving it to your kids or grandkids. I haven't done a QR code here, but if this is the gifting part, if that's your desire, the most important thing, then just text me, email me, and I'll send you the link to this landing page. We have a further landing page, ILIA, that's up in the left corner, Interactive Learning Information Assistant. The first two, you can just go into them. You don't need any login or password. Here you need a login and password. If after you finish those first two, in a sense, you graduate, and you'll want to go to this landing page, which is extremely robust and gives even more detail. And ultimately, you actually purchase from this site. This site, let me go back. Notice estimate my benefit, the third thing down on the left. Well, if for those who want to stick around, I'm going to show you how that works. But I want to show you from plugging in the numbers, a hypothetical, so to show you quickly what it looked like. So I'm going to use a hypothetical of 45-year-old male, excellent health, income $240,000. So I already put money aside, and he's willing to put in $50,000 a year for 5 years. Interestingly enough, the average age of Kaizen investor in the nation is 46, about this, and the average is 70,000 per year. We're going to use a growth rate of 6.81. This is the illustration rate recommended by NAIC, National Association of Insurance Commissioners. I don't think it's changed since then. I haven't checked the last few days, but 6.81. So we're going to show you some performance and comparison. So this is all come from that ILIA illustration software. So this software can crunch at 6.81 what what this $50,000 a year for 5 years in a regular investment after tax account, you could then expect an income of $41,332 per year from 65 to 95. In this example, I've used every penny, to give you as much money you can. 96 is zero. This software allows you to put in an illustration rate through 100 or whatever, but I did the 95. Tax deferred on an IRA or 401k, you can get $52,717 more. We're not talking Kaizen yet, but Kaizen, same 6.81 can give you 100,000 per year, starting at age 65. You'll have pulled out 3,100,000 instead of 1,281,000, over double. You'll still have a death benefit, and you can still take income beyond that 95. You had a death benefit when you began when you're age 45. It was life insurance. And so you can see in this example, we overcame all the costs of life insurance. Now, we do some interesting stress testing. We stress test this Kaizen, for this example, for the 1980s of high interest rates. Yes, it's not 100,000. It's 75. The worst scenario for interest rates still was a long ways from 41 or 52. And then we stress test this for the Great Depression in the 1930s. And it was 65, still hot, the worst in the market. It was better than 41, 52. And what is this double? 200,000. What am I dreaming? Allianz, one of our vendors, studied ILIA, illustration software, to see how accurate this software that we've developed is. And they came back and said, we think there's an 80% chance that it'll be double the 100,000. An 80% chance that we're extremely too low. Wow. Well, if it's a double, now we got income of $6,200,000 through age 95. That's a whole lot different lifestyle than 41,000. That was 5 yearly payments of 50,000. That's our example. Here's the first policy issue. It was issued in 2012 by one of the owners of NIW, the founders of Kaizen. And there's an annual statement, and the most recent one was June 27th, 2025. And here's the first policy's performance. It's averaged 7.85%, not bad. What does investors average? In the same period of time, the average investor is about 7. They pay fees, advisory fees, management fees. They go in and out of the market. They average less than the 7.85, the average investor. Then, remember, we have leverage. She's average paying 3.95 interest. So if we subtract what she made, 7.85, the 3.95 from 7.85, we have the spread, which is 3.9. That's how much money she's made on the borrowed money, which is 3 times what her money is. That's what using other people's money is. Another plus. I'm willing to do this leverage when I have no downside. Not if I'm putting in the market in 2008. We back tested this strategy to the 1930s. There's never been a 15-year period of time with less than a 2% spread. So, wow, I can probably count at 2%, the worst. Last 15 years, 3.9 spread. Maybe it'll be more in the future. 3.9. Other people's money working. The resources I have for you, I think my website is terrific. And we're working to make it better. We want it to be ultimate. So there's one resource. I've got a bunch of quick links in the website to help you. I have some retirement calculators on the website that I designed. This is the basic one that's so easy to do. You put in your age, what age you want to retire, what the inflation rate would be, how much you have invested. Do you need 80% of your income? This is common. And when do you want to retire? And we crunch what the gap is, from what your desire is and what your investments will do, what your gap is. And then with Kaizen, we can fill that gap. We have an advanced calculator on the website, puts in Social Security, all this fancy stuff to give you a more complex answer, but it's not too bad. I designed this too. Again, we have these landing pages that you can go to anytime you want. There's the QR code. Here's the one you need to ask me for. This is kind of a break time. I want to show you that Ilia software, but for those who have no more time, this is a good time to talk to you later. There's the QR code. There's my phone number. There's my email and website. Anything I can do to help. Now, for those who are sticking around, I'm going to go to this Ilia site. And what that means is I'm going to bounce out on my PowerPoint. And I'm going to go to my Ilia. Did I go to it or to the slides? I think I went to this. All right, I did go to it. I think. Okay, this is the Ilia site. And along the left side, there's introduction, lots of different chapters and information all along here. But I'm going to the estimate my benefit. And here I have two different calculators, the quick results estimator and the custom design. And the quick results is quick. So let's do it. So here we put in your age. Let's go a little younger. Let's go 35. Male or female, we're not doing a lot of questions, and then you decide how much you can do per year, and it's a sliding thing. Notice how that thing goes up and down. Where there's 44, there's 38. Oh, well, let's just stay at 38 for a 35-year-old male and calculate. I think I need all right, now it's working. So it's showing you the 5 pigs that you're putting in. It's showing you their money, the bank, and theirs. And here's the numbers. You're putting in 190,000 over 5 years. The bank is putting in 452,400 with no collateral on your part. So 642,000 is working for you. Then we can click benefits, and here's what we have. You're starting out with 1,377,000 life insurance. When you turn 65, we can start giving you a check for 146,000 per year, tax-free. Remember how much you put in? 190,000. You're getting 146 the first year. By the time you turn 90, you have pulled out 3,796,000. If you give this some time, not day trading, This is amazing. Protecting the downside. Then we even have a comparison. So how does this compare? There's the Kaizen, this first column. Here's the same life insurance policy without the borrowing. Instead of 146,000 income, 83. That's what other people's money do for you. If you did it in a regular account at the same return, 6.81, you could do an income of 53,000 a year. Or if you did an IRA, 69,000. Like getting life insurance free. And you could, this calculator, you could just spend all day just changing the age and amount. But the custom one is really cool. It's the final one. It's it. So here we put in a name, and I can just put initials, and I select a date, a birthday, 01/01/2000. That's a 26-year-old. Oh, let's go 1990. Now we got a 36-year-old. Should we go 1985? Let's do 85. Select gender, male or female. Doesn't matter which we do. Health, average or excellent. Then they ask the question, do you use tobacco or marijuana? No, hope. Then we say, do you want income from this or just life insurance? We're going to go, we want an income, and then you put in how much you're going to put in per year. I don't know. What do you want to do? Oh, let's be a little dramatic. Let's do 100,000. 100,000 for that. What was it? 35? Well, I forget the age, but we'll see soon. So here we do next. Then we select from what age to what age do we want guaranteed income. Let's leave it at 65, but let's change this to 100. And then we select the risk level. I always go with low volatility. And then you click view results. Notice it says stress testing. Please be patient. This could take up to a minute. With all the details we added, now we're actually getting a life insurance legal illustration. What you're going to have is from this document, you can push more buttons and buy this thing. The guys shouldn't call it this thing. But anyway, it does take a little bit of time. And while we're doing that, let me look at our participants. And you could type in any questions, or we could answer those. Let me go to the questions area. Hasn't been any questions asked yet, but at the same time, our software finished. So let me go back to it. So we get the same results that we had just on the first one, but as exact. And way up here, notice this circling thing, loading illustrations. They're actually loading the illustration from the life insurance company and from Kaizen, this will be the illustration given to you at your purchase, as long as you're the excellent health we chose. They're done. Let me show you what we have. So on these illustrations, we have the carrier illustration. This time we were with what company? Let's see what company we get here. This is National Life, and so this is what they're going to live with. It explains it in detail. It goes over the leverage. It goes over everything about who they are. It talks about the riders we add to make this thing work. It talks about the indexes. We haven't spent any time on that. But it's the actual illustration. We can also look at the Kaizen illustration. This is the one NIW stands by for as your ability level is correct. So here we have the explanation, what you're getting, and the death benefit and the expenses, and it gives you all the detail in print. And it goes over, it talks about all the different assumptions. It goes over the stress testing for your age and policy. It does everything. Goes over all the illustration, run the numbers. I refer to this quite regularly. And you can play around with that. Not much effort to redo another one. But anyway, that is Inversion Thinking and Kaizen. The foundation webinar, how did I do? Even it's just 9:41 and we spent a little bit of time doing some illustrations. I didn't see any questions. So we're going to go do some fun things today here in Hawaii. But appreciate you attending. If you have questions, you can email me, text me. I'm available to help people meet their goals. And or you could listen to the same webinar. Maybe I'll change a bunch of things by the time I next time do it. But appreciate everyone's attendance, and have a great day until the next webinar that you attend. We'll see you then. Bye.